Have you ever pondered what the split will do to the price of Tesla's stock? While many are anticipating Tesla's 3-for-1 stock split, different people have different ideas about what the price will end up being. To learn more about this, stay watching and tuning in. After the proposed Tesla stock split, some investors think stock prices would soar, while others don't think so. Investors and analysts place varying values on the electric vehicle company and predict varied outcomes following the split. You will witness the price reaction to the Tesla stock split today. Based on global sales, Tesla is the biggest manufacturer of electric vehicles. The company's ability to generate profits has increased recently as profit margins have continued to rise. Long-term debt is comparatively low on Tesla's balance sheet, and cash reserves are greater than these obligations. Tesla's stock price increased when the firm announced its intention to split its shares in March. One expert, meanwhile, isn't sure the investor hype will hold for very long. The CEO of investing firm New Construct, David Traynor, stated that the action might potentially increase the market bubble that some stock watchers believe Tesla is about to burst. Tesla's efforts to pursue a stock split do not alter the fact that shares are selling at a valuation that is wholly unrelated to fundamentals, Traynor said, even when the split drastically lowers its share price and gullible retail investors eventually flood in. Traynor said that the split's resultant lower price for Tesla would entice buyers to seize the chance to purchase and feed what he sees as a bubble. The intention to seek shareholder approval on a stock split comes as Tesla faces rising competition from legacy automakers rushing into the electric car industry. Stock splits occur when shares of a company's stock explode in price but are out of proportion to the company's core value. Additionally, Traynor stated that Tesla has to sell far more than 16 million vehicles annually to support its present stock price of more than $1,000 per share, given that it only sold roughly 1 million vehicles in 2021 and is far from producing enough vehicles to support that price point. In the meantime, machine tool and manufacturing expert Sandy Munro, an automobile engineer, has declared that Tesla had no rivals. Nevertheless, it is important to remember that the price of Tesla's stock fell even further in June. Since the beginning of the year, the maker of electric vehicles has seen a 45% decline in share price. The recent decline was intensified by a fresh wave of pessimism that permeated the market in response to hawkish remarks and actions from the Fed, resulting in new year lows for U.S. indices, including the S&P and NASDAQ last week. That longtime investor favorites like Tesla aren't getting much love right now is understandable. Jones explained the stock price has almost halved from its 2022 highs at $1,200, but perhaps there are early signs of a base building ahead of $600 per share, stated David Jones, chief market strategist at Capital.com. Right now, a lot depends on the sentiment of the broader market. Given the uncertainty around the duration of high inflation and the amount of additional interest rate rises required to offset rising prices, investors are unlikely to quickly return to taking risks. However, this 600 range is still worth keeping an eye on as a possible floor for Tesla's stock. Investors with greater patience will be content to wait and watch to see if the overall state of the market improves this year. Amazon is among the firms that have already separated, and Tesla and Alphabet are among others that are preparing to do so. The crucial query at hand is, why do these large companies split their stocks? The basic explanation is that many small investors are unable to purchase stocks when share prices rise too high. Splitting can draw in additional small investors who are interested in purchasing the shares, even when it has little effect on the company's core operations. After the planned stock split is approved, do you believe the price of Tesla's stock will rise or fall? Post your ideas in the space provided for comments below. The most crucial lesson for investors anticipating the stock splits of Alphabet and Tesla is that complicated factors can influence a stock's performance following a split. Amazon serves as an excellent example of this. It should be mentioned that prior to its early June 20-for-1 stock split, Amazon shares were trading for well over $2,000. The company's share price was only about $100 following the stock split. That is far more within the reach of most investors. Others predicted that this would have caused Amazon's share price to rise significantly, but it didn't. Several reasons, of course, account for this. First off, general market dynamics have an impact on all stocks. The COVID-19 epidemic and the conflict between Russia and Ukraine are two global crises that have a significant impact on the stock market, making it volatile. Regretfully, Amazon chose to split its stock during a period when the stock market was collapsing. After a split, the stock price of the company is also influenced by its overall performance. For instance, when Amazon revealed its first quarter earnings in April, investors were not impressed. Both its own surplus capacity and inflation are putting pressure on the company's costs. These problems were not resolved by the stock split. It is crucial to remember that stock splits do not always make up for difficulties that businesses encounter. That's not to argue, though, that Tesla or any other firm preparing for a split won't see a boost in market value when their stock splits are completed. Having distinct business models and a different dynamic from organizations that didn't fare well following the split could also have a significant role. That applies to Tesla, Alphabet, and Amazon. Even while Alphabet and Amazon are competitors in some markets, by the time Alphabet and Tesla split their stocks, the dynamics of the stock market as a whole might have changed. While Alphabet's 20-for-1 split in mid-July is quickly approaching, Tesla hasn't even announced a date for its anticipated 3-for-1 split. However, the general state of the stock market may differ markedly from what it was before Amazon's stock split. Again, stock prices are heavily impacted by the state of the stock market. For Amazon, Alphabet, and Tesla, however, the most important factor is how much each company can grow in the long run. All three businesses have undoubtedly proven in the past that they are capable of producing rapid growth. They should all have promising futures. The financial services companies Royal Bank of Canada, RBC, and UBS Group upgraded Tesla from neutral to buy last month, which was great news for the electric vehicle manufacturer. Senior equity analyst at Morningstar, Seth Goldstein, stated that the most recent request from the Tesla board to authorize a 3-for-1 split is expected to be approved in August, when the company's investors are expected to meet. The analyst emphasized that there has been no change in our present fair value estimate of $750 per share. We think lower production at the Shanghai factory, as well as startup costs associated with the opening and ramp-up of its 2 new plants, will weigh on second quarter profits. Goldstein responded when asked about his expectations for Tesla's future performance. But we anticipate that profit margins will rise sequentially in the third and fourth quarters as production picks up. It's crucial to keep in mind that analyst and algorithm-based estimates, like Tesla's stock projections, are subject to error because they merely draw from a review of the share price history of the company. Future outcomes are never guaranteed by past performance. Therefore, it's crucial that you do out independent research, read up-to-date articles about the EV market, and analyze Tesla charts. Your willingness to trade is influenced by your tolerance for risk, level of market knowledge, portfolio spread, and comfort level with losing money. Trading with more money than you can afford to lose is never a good idea. Based on your personal research and risk tolerance, you should determine if Tesla stock is a good investment for you. Buying Tesla shares should only be decided upon after careful consideration of the company's financial standing. Your financial objectives, risk tolerance, target portfolio allocation, income, work status, and other comparable factors should all be taken into consideration when making an investment decision. For more of this information, be sure to check out Tesla stock and our other films. In conclusion, even though the outcome of Tesla's stock split is still up in the air, it is obvious that a number of variables, including investor sentiment, business performance, and market dynamics, will have a big impact on how much the stock moves in the future. Before buying Tesla stock or any other stock, investors should evaluate their individual risk tolerance, carry out in-depth research, and possibly seek advice from financial experts.